And after a lot of hard work, I'm now just seeing colossal capital gain. I started off, which got me into this journey, buying houses and really having no clue what I was doing. It's cheap, therefore it's got to be good, which my first investment property, I paid 380,000 for it. 10 years later, it was worth 320,000. So if we look at total listings, and that's houses, land, villas, apartments, anything that's real estate that's not commercial for sale, in 2008, it got as low as 8,500 listings. Today, as of Monday, it's 3,400 and a balanced market's around 13,500. To a client, I bought a house for them, very simple, 3-bed, 1-bath, retain and build site in a suburb called Southlake. We paid 420 for that a year ago, and on market that's gone for 700 to 720 today.
Hello everyone, welcome to another episode of Passive Income Doctor. I'm Dr. Dan, and today we have a special guest, David Hoare, Perth-based buyer's agent. Welcome to the show.
Thanks very much, Dan. How are we going?
Yeah, good, thank you. So let's start. Can you tell our listeners a bit about your professional background and also how you ended up as a buyer's agent?
Yeah, so don't tell anyone, but I'm a Kiwi. I started off, graduated, went to university, ended up working in a steel fabricator's shop. Really didn't like that, a bit hot. And you really only made, every dollar you made was for a dollar or for an hour worked. Was fabricating something up. There was a critical dimension missing. Went to the boss and said, I need this one. He jumped on AutoCAD and gave me the dimension, asked him how he did that, ended up going through TAFE, becoming a draftsman, did very well at that, then became a project manager, then a project engineer, and then became disillusioned with the industry. I then decided to make my passion of real estate from a hobby into a career. So I bring a lot. So the bulk of my clients are investors. And the thing about having that engineering background and having built mines all over the world, it teaches you, as my ex-wife will say, you're very emotionally detached. So we don't fall in love. We can just look at things coldly and unemotionally, and we can make great decisions in that manner. So I've been a buyer's agent now for 13 years. I just work out of there's myself and my assistant, although I'm about to bring on a second buyer's agent because it's just getting too busy. And the bulk of what I get is off market.
Yeah. And can you tell us what a typical day looks like for you? I would imagine it would vary from day to day, but
Most of my day is set on this thing. I would make or receive about 40 to 50 calls a day. They can be from agents. I would spend at least a third of my day speaking to existing clients, giving advice, helping them with problems. I've got a large network of other property professionals. Sometimes I'm helping them, sometimes they're helping me. And then the rest of the time I'm talking to agents, trying to find out what problems they've got and trying to help them out
yeah,
and
perfect.
hopefully
Yeah,
get some
sounds
business out of it.
yeah, that's right. Sounds like yeah, very busy at the moment, which we'll touch on as well. Um, can you share with our listeners, and you can go into as little or as much detail as you want, into like your own investing journey or background? And I guess we can also touch on obviously because you're Perth based, Perth kind of doubled between 2004, 2007, and with the kind of current Perth boom, time of recording is mid 2024. Is there any kind of parallels or differences between this time and that time?
Yeah. So look, I have a substantial portfolio. And after a lot of hard work, I'm now just seeing colossal capital gain. Um, I started off, which got me into this journey, buying houses and really having no clue what I was doing. It's cheap, therefore it's got to be good, which my first investment property, I paid 380,000 for it. 10 years later, it was worth 320,000. Great result. Now that property has exploded. So I started buying houses. Some did really well using my engineering income. Some didn't do so good. And I couldn't work it out. Ended up working for a company called Momentum Wealth and learned a significant amount of about property, and over that time really added to my portfolio. So my portfolio, don't laugh, includes property in Fiji. It includes property, and once again, don't laugh, in Cooper Pedy. It used to include some US commercial, which I've sold to put into an investment in Australia. It includes some Pilbara property. It includes some SDA property. It includes some HMOs and a couple of houses with granny flats. It's very interesting. All my properties, after some pain, are now positively geared, with one exception. And the intent is that I'm going to knock over what is a pretty nasty, pretty horrible house in around 18 months, put two what we call HMOs, rent by the rooms, on it, and each side will chuck off around 2,224 a week in rent. And that's just a forever keeper using the depreciation of the new build. So what was the next part of the question?
The next part was about 2004 to 2007 Perth
Yeah.
boom, and this time any parallels or differences?
So there's some very substantial differences. The 2004 to 2007 boom was mainly driven by a mining boom. So we had a very rare, so normally the iron ore cycle and the gold cycle and the oil and gas cycle move completely unrelated to each other. All three harmonized, and we saw massive construction projects around oil and gas, around iron and ore. The similarity is huge migration came into the state. So if we look at total listings, and that's houses, land, villas, apartments, anything that's real estate that's not commercial for sale, in 2008, it got as low as 8,500 listings. Today, as of Monday, it's 3,400, and a balanced market's around 13,500. The principal, so we still had the very strong migration, but the principal difference is the mining industry and the oil and gas industry are average. They're not boom, they're not bust. It's And I guess the other principal difference going back to 2004, 2007 is the building industry then was in a very healthy state. They were able to get trades to build to meet demand. Today, the West Australian building industry, I know every state has this problem, but ours is worse than any others because we've had 10 years of a declining building industry. So people didn't want to build 3 or 4 years ago. Why do I want to build a house today that's going to be worth less $50,000 tomorrow when it's done? I'd be a mug to do that. So there's 1 year when we saw over 250 builders go bankrupt. And you'll hear a lot about trades and a trade shortage, which is very real. But there's two other significant problems that are holding back in Western Australia. The first is builders insurance. That has gone up because of the large number of defaults that we're seeing. And the other one is working capital. So we had the state grants and we had the federal grants. So you could get up to $45,000 per property in grant money. So I had one client, he got $90,000 discount to his build. He absolutely wrapped by it. But there's so many builders have gone broke, they've hit the wall. So discussion with one of my builders who used to do 35 a year, he's gone, David, you know what? I'm over it. I'm going to do 12 builds a year. That's my price. You don't like my price, that doesn't matter because I've got 20 people behind you. And he's not taking anyone till May next year. His book is full. He's not interested. He's not taking on any more work. And I'm seeing that as a real common theme throughout the building industry. They've increased margins. They've decreased workload. And they just want to cruise a little, not cruise, but they just don't want to go back to that madness that we had. In addition to that, there are some very worrying things happening within the building industry. There was what we call Chinesium piping. A large number of the homes that were built, in particular by a company called BGC, have leaking piping. So there's one, I was reading an article, 22 leaks in his house, and BGC haven't replaced the piping. they've just gone through and done patch repair and patch repair and patch repair. I think he said his kitchen's been out 4 times. There is a lawsuit around that, which is really going to hurt the major builder. And there's a lack of faith, particularly in package builders, because some of their behaviour has been abhorrent. And the state government has pretty much been asleep at the wheel. Look, personal belief, and it is a personal opinion, I believe it's because the building industry is a major contributor to the state Labor Party, and they don't want to bite the hand that feeds it. And in countermand to that, so you're seeing builders that have come through this, they're doing 2 to 3 builds at full margin to take that profit to finish a build where they're losing money on it. But we still have houses, it's been 3 years and they don't have a roof on. So West Australians, compared to 2005, 2007, they don't have faith in the building industry.
Mm.
And
Yeah.
the mining and the building industry are the 2 biggest changes. But on the buying side, I'm just seeing all reason having been abandoned. Just properties that shouldn't be selling with very clear. I'll give you 2 examples from 2 weeks ago. So beautiful 4-bed, 2-bath home in Forestfield, right under the power lines. And they're substantial. I think they're 100 kV power lines and you're right underneath them. 2 years ago, that wouldn't have sold. The agent got at least 4 offers on it. I know him very well. It was advertised at from 800. I thought it was worth 850. Ring him up on the Monday morning. Say, okay, how are we going? Where are we going to be? And he said, David, I'm at 920 cash, no conditions. You'll need 950 if you want it. And he knows I was going to run up that. And so we did. And another one, which is a very original deceased estate, 3-bed, 1-bath in Condola, which is a bit of a rough suburb, asbestos roof that was frying, asbestos garage that was frying. I appraised the property at 525 and it sold off market for more than 600. And that house shouldn't have sold, not with that roofing problem. Most people would have gone too hard and run. So yeah, the buying out here is really difficult. And agents, I've been doing this for over 13 years. I've got relationships with most agents. I can generally get a ballpark of where we need to be. And I'm just going, what? Yeah, I know. I'll see. I'm on to the next one. Yeah, it's very challenging on the buy side.
Yeah. And yeah, that's a good, balanced market, 13,000, 13,500, and at the moment, yeah, 3,400. That's pretty significant.
We're at a
And
court 25% of balance, right? So just desperation. I was just speaking to a client. I bought a house for them, very simple, 3-bed, 1-bath, retain and build site in a suburb called Southlake. We paid 420 for that a year ago, and on market that's gone for 700 to 720 today. That's just the growth we've seen in the last 12 months.
yeah. And I just wonder, is it with the construction, increased costs, inflation after COVID, etc. Is it also some of I was listening to, I think, another podcast, Perth Property Show, I think, and they were talking about how, some of the triplexes or even apartment buildings aren't stacking up, and maybe they're just waiting
Yes.
for land prices to go up and make some of those developments feasible. Like, what is your experience around that?
So there's been a couple of changes. So the first one is, it came in last month, is the state planning policy changed and they introduced something called the medium density design guidelines. So town planning engineering is very descriptive and very precise. Town planning is the polar opposite. It's very vague and broad and can be easily construed in multiple directions, which is why we have town planners. So they've come into effect and there is a lot of unknown about what can be built on a site. And it's going to take 1 to 2 years of going through councils, getting decisions, going through the courts before we know what we can realistically build on a site. So we have an unknown from a planning perspective, which is putting people off. And we are also seeing, so yeah, your typical triplex, it's very hard to make one work if you use today's numbers for the end product. But I've just had a client recently, a suburb called Willagee, paid 860 for the block, dropped it, triplex it, and we sold each unit for between 860 to 880, and that made very good money. But it is challenging to find a demolish and triplex. So I am, however, still seeing good money in retain and build. So keep the house, build one out the back. There is suburb dependent, very, very good numbers in those.
Mm.
And my preference is you keep them, you don't sell them. You get the depreciation off the back build. When the Perth market's showing signs of cooling, sell off the front house, hold the back house forever. In 20, 30 years, that depreciation that you'll have to pay back is eaten away by inflation and becomes meaningless.
Yeah. And also with this kind of shortage and still immigration coming in, do you have any a crystal ball about, how much longer the Perth market has to run?
Look, it will be so if we're short 50,000 homes based on the migration that's come in, ignoring natural growth on top of that. So at the current building trends, it will be at least 4 years before our building industry can match that demand. And that's without the current migration that is coming in. Consensus in the industry is we have at least 5 years of a incredibly tight market. Once again, I think the only thing that will see a market cool would be a war with China. People are saying, oh, but the iron ore price is cooling, and it is
Hmm.
cooling, but you're taking, a product that's making you 400% profit, and maybe your worst case is it's making you a 200% profit. Most companies I know are quite happy to make a 200% profit. I know I'd love to. So that's it will be at least 5 years before we can get back to any semblance of balance. So what I'm starting to see that it's really become a trend in the last month to 2 months is people, owner occupiers really got active in Perth because they literally couldn't get a rental property. There was nothing to find. You'd go application, and they went, oh, bugger it, let's just buy it. Go to the bank of mum and dad, friends and families, talk to a broker, get a house. And they were forced into it. What I'm now seeing is your first home buyers are getting priced out. So prices have risen to a point where they're not qualifying for finance. So what we're going to see over time is continued price growth, but we're just going to see less and less entrants, pardon me, because they can't qualify for finance to buy. So I was just having a conversation with a client today. He's got 700,000 and he wants to get a 3-bed, 1-bath house within the 25K CBD ring. And I've had to say to him, look, it's going to be really difficult. It's not impossible, but you need to be very quick. Whereas if he says, I've got 650, I can't help. I can't do that deal today. So I think we'll see house prices, and I'm talking houses, not villas, not apartments, still having 20% growth left in them this year.
Well,
But as more and more people get priced out, I think we'll slowly see stock levels rise till we get back to equilibrium where there's just less buyers who can afford to buy.
yeah. And I'm seeing that because I'm Sydney based. A lot of first home buyers and even upgraders, with the high interest rates, 3% servicing buffer, etc., kind of affordability in rents and also purchasing price, starting to kick in. And yeah, it will
Yeah,
be interesting to see what happens in Perth as well. And yeah,
yeah,
I think some people will say, oh, Perth is a mining town. I know I personally don't believe that. I visited it last year and a lot of employment, I think a bit more diverse than say 20 years ago. And I mean, some people say, we're quite reliant, or WA is quite reliant on the iron ore price, but I guess like what is
it
the current
is.
iron
Yeah.
ore price? Is it like 50 or
It's around
$60
about
or something?
110,
110. Yeah.
120 US dollars an ounce. And look, mining and oil and gas are a substantial part of our economy. Bankwest 2 years ago did a study, and the mining industry and the industries that support that. So, okay, so I'm a mining company, but look, I provide rubber that goes into
Mm,
conveyor belts. I'm a chef that cooks. Is around 52% of our economy. The mining and the oil and gas industries at the moment, they're not booming. They're not in bust. Lithium is hurting, and nickel is definitely hurting. They're a small part of our economy in terms of mining, and we are seeing redundancies, but those people are being absorbed into other mines because there's just not enough work. I'm going to polish the crystal ball. There are some technologies that, if they're successful, which is a big one, we'll see West Australia just explode. So the first is hydrogen. I think there is a long way to go. Reading an article, it takes 14.7 kilowatt, sorry, 42.7 kilowatt hours to make a kilo of hydrogen, which blew me away. That's a lot of energy. If that can be refined and bettered, I believe West Australia, because of our sunshine, will be one of the world's producers of green hydrogen. The other one that is very interesting is in April, a Korean company called POSCO started manufacture of a trial hydrogen steel plant. So instead of using coking coal and coal to produce steel, they're going to do hydrogen. So CSIRO has got it what we call small scale technology. POSCO is spending 50 million US dollars building a trial reactor, which is exactly that. It's not intended to be a production, to try and learn to better it, to increase the size. If they can get that to work, I believe West Australia will no longer need China, and we will be the world's producer of clean, green hydrogen steel. Big ifs, both of those, but if that technology does come good, I go back to 2010 in the mining industry here. You couldn't hire anyone, and when I was in the industry, to do anything. You couldn't get a rigger, you couldn't get a cleaner, you couldn't get a cook. You're at the bar having a beer, someone walks in to the bar staff and says, "You four, do you want a job? What do you want? Right, do you want double the money? I've got a job for you starting tomorrow." They'd literally walk out. It was in a hotel in Port Hedland. "Oh, where's the cook? There's no breakfast." "Yeah, he got poached last night. We're flying a new one up from Perth tomorrow." um, if those industries take off, they will be bigger than that. And everyone needs a house, right? It's just a fundamental basic. So we're 5 years barest minimum. One of my clients is the former head of the Saudi Arabian Sovereign Wealth Fund. Very, very clever, articulate Australian man. He loves Perth. I bought quite a few properties for him. And he was saying, "What's the opportunity?" And I was saying to him, "Come set up a building company. You will absolutely kill it because they've got no working capital. Bring a large sum of working capital, get some really good people behind you, and start building." Because we're seeing, I've done a ring round with the brokers on Monday, as I do, and they're now seeing buyers just giving up
mm,
on buying a house. They've done a pre-approval 3-4 times. They've not been able to find anything. The prices have moved out of their range, and they're now doing house and land packages, knowing that they've got a 2 to 3 year wait, because that's their only net choice that they have now. And it's not fun paying rent, paying a mortgage on the land, waiting for your house to be built. That can hurt,
mm.
and that's where we're seeing, particularly at the low end, the buyers at, because that's their option.
Yeah, definitely. And thanks for a lot of reading for me to read about the, green hydrogen and things like that as well. Going back, so what you said earlier is the mining companies with iron ore were making 400%, now it's 200%. Does that mean they're selling
Well,
it,
no, it's
say,
not
oh,
200%. It's costing them about $25 a ton to pull out of the ground.
okay, and they're selling it for about 110. Is that right?
10, 120.
Yeah,
Yep.
wow. Okay. Yeah, and I
Yeah.
think I read somewhere, yeah, the BHP Rio, they're kind of the world's like quite low cost producer, isn't it, compared to some
Uh,
other countries?
Low
So,
cost, high quality.
mm,
So it's in terms of the amount of iron and the impurities in the iron. So you can get companies, so is it Guinea? They're producing it and it's got either a lot of sulfur and a lot of aluminium. It makes refining it quite difficult, whereas the impurities in Western Australia are much lower,
mm,
and they're preferred.
yeah.
The other thing to understand is steel mills tune their mill to match their ore. So they don't like changing to a different ore because all of a sudden the production is not as efficient. They've got to retune the mill. So they generally try and run either one type of ore or a continuous blend of ores.
Mm. Yeah, I think that's good to put in perspective because, people say, oh, iron ore was, $200, over $200 a ton, or ounce, and now it's halved, but it's still, quite substantially higher than what they're producing it at.
It's high profit. It's
Yeah,
still very, I'd love to make a 200% margin on everything I sell, right?
yeah,
400 is better, but that's, you just got to understand that fundamental.
yeah. So just mindful of time, let's talk about, do you have a personal philosophy about property investing, houses versus units, asset
Yeah.
selection? Some people talk about avoiding, power lines, main roads, and then also there's always a debate about, capital growth versus rental yield. While some people say you can have both. If you can share us,
Yeah.
some of your personal insights.
So I'm going to base this particularly on Western Australia.
Mm,
So houses are what people want in Western Australia. Apartments month to month are 7 to 8%. The remaining 12 to 13 is units, villas. Houses are what people want. Now at the lower end, you're getting priced out. You've got to go to that villa apartment. But my belief is I'm very, very big on add value. So taking a property, doing something to it. So if you're just buying a house with no add value, you're going to get whatever the market gives you. If the market rises, you're going to do well. If the market falls, you're going to hurt. So I'm a big, big fan of add value. It's very core to pretty much everything I purchase. So I'll take you to a very recent purchase. Agent rings me, David, got a property for you. Where is it? Look online. Oh, yeah, I'm keen. Go to the house. It's like, hey, Patrick, what's going on here? Um, so it's a hoarder home. It's not the worst one I've seen, but it's certainly pretty bad. Dad has severe dementia, and what he's been doing is going to the markets. And he has been on the weekends, he buys a piece of rubbish, brings it back home, throws it in a room, and he's just over the last 10 years added to it. He has three children, one in Sydney, one in London, one in the same suburb who is morbidly obese and is not able to help. So dad's gone into care. The agent is friends, personal friends with the lady who's been tasked. She's in London and she's just gone, he's gone, look, this is in really bad shape. There's just stuff everywhere. I can't put this house on the open market. And she's gone, look, we've got to pay for dad's care because aged care is very expensive. What can you do? So he rings me that the house is a very tired hoarder home, 3 beds, 1 bath, but a very comfortable retain and build. I've got the perfect client for it. We negotiate, we go get a building pest and electrical inspection. That all comes back good. We basically negotiate that once the ink is dry on the contract, we get access to the property. And it was around 14 10 cubic meter skip bins after the good stuff was sold. So fridges, TVs, there's a portable aircon, that all went. My client's then undertaken a substantial renovation on it, and we've taken it from 3 beds, 1 bath to 4 beds, 2 bath. Where subdivision process is now underway. And at the back, we're actually going to build a 2 bed, 1 carer room SDA unit. We paid, I think it was 440 for the house. That today is worth 650 as is, easily 650. I'm probably undercooking it. And it's getting $650 a week rent. And we're going through planning at the moment for the subdivision. That'll take 9 months. And then once that's complete, we'll start the SDA build out the back.
How
which
long
will be a
ago
high
did
cash
you
flow.
how long ago did you purchase this one?
So I put the offer in January. We settled in
Wow.
March. Okay, and that, as a 3 bed, 1 bath, yeah, it was in pretty bad shape. So my client spent around 85, 90,000 and a lot of sweat on the renovation. But we've really gone, so the suburb that it's in it's all full of 3 bed, 1 bath homes, but your owner occupier and your tenant, they want 4 2s. So the property had a lounge added on that was a bit crap. So my client sorted that out, got rid of the face brick, put in a proper ceiling, converted what was the front lounge to a bedroom with an ensuite. The sewer location sadly couldn't have been worse. It was quite a lot of money to sort that out, but now it's really, really well presented. He's made good money. He's positively geared, well, positive to neutral on the rent. And once the subdivision is complete, we'll start the build out the back, and then he will be seriously cash flow positive.
Yeah, very good.
And
Houses, yeah, I think most capital cities, Australia, yeah, house is the preference. Um, and what about in terms of any tips in terms of yeah, asset selection? I think you mentioned add value. And what about in terms of
location.
capital growth versus cash flow? I guess it might depend on the stage of life for the investor, isn't it?
Correct. So first of all, I avoid low socioeconomic areas. So I'm going to pick on one that's been absolutely plugged is Armadale. A lot of people have gone on there and they've made great capital growth, but your tenant quality and your neighbor quality is pretty horrific. So I'm really looking for the 25th to 100% percentile of income. I don't really touch low socioeconomic. They're just not worth it with the hassles that come. Um, I'm always after houses, and look, it really depends what's right for the client, their stage in life, what their budget can afford. I personally hate negative gearing with a passion. And if you saw me as little as 12 months ago, everything I was buying with the add value strategy would be positively geared. So I had a situation in my own life where I couldn't earn any income for 6 months and negative gearing killed me. Now, if I lose my job, which is a bit sad because I'm the boss, I don't care. I'm positively geared quite nicely. It's not enough to live off, but it is certainly positively geared. We'll be fine. Um, Now, when your interest rate is 6.5%, your holding cost, rates, insurances, etc., is 2.5%. It is very difficult, not impossible, to get that property to a neutral hold. So, I've got some clients who are quite happy to take it, and others, we're doing everything we can to get that as neutral as fast as possible. So, strategy I love doing is rent by the room. It is becoming a smaller margin today just because house prices have really climbed. But for example, bought a 4 bed, 2 bath home in a suburb called Southlake, converted that to 5 beds, 3 baths, rented that by the room, makes $1,500 a week. And we've had explosive capital growth. That was an off market home, bit of a sad story around domestic violence. Just had to be moved on very quickly. The house was pretty tired and pretty run down, which was reflected in the buy price, but we manufactured growth through the renovation, manufactured income through turning it into a rent by the room. That's sort of the things that I'm really trying to do for clients to just, when you're positively geared or neutral, there's just no stress in it. You're not worried that you've got 2 weeks of vacancy. It's just in this market with such limited stock becoming very, very challenging to do because prices are just, absolutely zooming ahead.
Yeah. And yeah, that's interesting. I think not too many of my listeners would have heard about HMO or House of Multiple Occupancy. Kind of what
Yeah.
attracted you to that in the first place, and I guess what would the typical kind of renter look like, and property management fees and things like that.
Yeah, yeah. So what happened is I had a property in my own collection that was quite negative. Great property in a suburb called Bayswater, 1950s California bungalow. Um, Sorry, Adam. can you just stop for a second? It was a 1950s California, shut the door. 1950s California bungalow, but a beautiful home, got it at a great price, renovated it, added value, had no skin in it once the renovation was complete, but it was eating me alive. Found out about the strategy and implemented it. So, I don't like putting my clients into things I haven't done and haven't learned myself. So it started off as a 4-bed, 2-bath home and converted that now is 5 beds, 4 baths. And that's poking it's a little bit over $1,500 a week. So nicely neutral. What I've now moved on to is really trying to get them into 6 beds because that is where the strong cash flow is. So, example, we settled on a property last week in Joondalup, 4 beds, 2 baths, 220 square meters of house, plus a very large garage at the rear. On a corner block, demolish and duplex site, which will be that 20-year vision for that property. House is built early 1990s. It's, again, another off-market purchase. It is, sorry, my cat's just going to say hello. 1990s purchase. The seller sadly had some unpleasant medical issues. He needed, so 1 in 10 transactions, price is not the driving factor. So this guy was very unwell. He's going to pass away in 6-8 months. He has a son who he described as a dickhead. He wanted to buy his son a house before he passes and put it into a structure such that the son can't sell it. Okay, because he doesn't trust the son once he passes to sell the property, party it away, and then have nothing. So that was really guiding him. So what he needed was, look, and we paid, I think we got a great price for it, but we still paid, $740,000. We'd said, leave anything you want behind. Strangely, he left pretty much nothing behind. Flexible settlement. You tell us when you want to settle. And once you've settled, please stay behind for a week so that you can move over if you have a medical issue. And if you need more, honestly, we don't mind. So it's currently 4 beds, 2 baths. That will be converted to 6 beds, 5 baths. And that will poke around 2,224 a week rent. What we're then going to do is subdivide off the rear of the lot using something called the single person's dwelling exemption. And at the back, we're going to put a 1-bed, 1-bath study, which is a bedroom without a door. And then we'll rent that for around $500 to $550 a week. That's what really gets me excited. Strong cash flow, great location, and we've got a future plan for that 20-year window. We'll push the house over. It will be fully depreciated by then. And we'll put 2 really nice townhouses on it, which we could do today, but the maths don't work on that.
Yeah.
So what I am struggling with is, to get those 4.2s at that sort of 750, because they're generally now going for 850 to 900. Your conversion costs can be anywhere between 150 to 200,000 to get those extra bathrooms in, to get fire compliance, door handles, furniture, all the other things that go into it. But it's just a really strong cash flow. And if you put that in with a great location, and then you add some future subdivision potential on it, it's fantastic. So for a room, our best room is getting $485 a week for a room, not a house, a room.
Wow, that's amazing. And David, I think, are you happy to stick around for a little bit longer, or
Yeah,
do you have
yeah.
to go? I think
No,
just
no.
we're going to pause this for a quick break, and then we'll come back
Yeah.
after this short break. Hello, everyone, and welcome back to Passive Income Doctor Part 2 in our chat with Perth-based buyer's agent David Hall. Welcome back.
Thanks, Dan. Pleasure to be back again.
No worries. So in part 1, we talked about, all the signs about shortage of trades and materials, and also high immigration into Perth. and
Yep.
how, building supply is not meeting up with demand, and also the variety of factors and industries that make you and also me as well bullish on Perth over the next couple of years. We also touched on an interesting concept, HMOs, House of Multiple Occupancy, how it can really boost cash flow. And yeah, definitely, everyone needs a roof over their head, and in a very tight rental market, this can play a factor. Have you seen? I think I was listening to somewhere else where a Perth property manager says, with kind of huge rent increases, perhaps we're kind of reaching like a affordability limit or cap. Um,
Absolutely. Yeah, no, we are, and it's really come out the last month, 6 weeks. Our vacancy rate is 0.4% according to Rewell, which was released about 6 weeks ago. So it's not a lack of demand, it's a lack of affordability. We're really starting to see, particularly families, which is why the HMOs are so good. We're really seeing families now struggling to pay more. So a property manager might put something up, um, but people can't afford to pay that. So they're not going to take that 4.2 in that location. They're going to go further out, or they're going to get a 3.1. It's the really at the lower end of the scale, as to where people can afford. I'll pick just pick Joondalup. If I was to go back 12 months ago, a nice 4-bed, 2-bath with a pool was 500, 550 a week. Today, that's nudging 850. Families just simply can't afford that with all the other cost increases that have come on. I'm noticing now that I'm not saying that they're going backwards, but I've noticed the rate and increase in rents has really started to flatline. And in some markets, stock has definitely risen. And it's just not the fact that there isn't need, there is need, but people just can't afford to pay that price.
hmm. And
Um,
in terms of the segments of the market, do you see kind of more high-end, premium suburbs, western suburbs of Perth kind of have a struggle in terms of leasing out, or you seeing, some people quite
Everything
high
is
income and still,
leasing.
yeah.
Yeah, everything's leasing. So the higher the purchase price, the lower the yield
Hmm.
in general. So the lower the price, in general, the higher the rental yield. So if we were to go back a year ago, everything I was buying was a 4.8 to a say 5.4% gross yield. Today, the yield is now in the low fours because rents have flatlined, but house prices are going absolutely crazy. So we've entered into that next stage of the cycle. I still believe we've got the best rental yields in the country for a capital city, but we're now starting to see that yield fall as prices grow, and tenants just can't afford more unless they're a nice FIFO worker. So I was speaking to a young bloke. He earns 85 grand a year. He's single. He's just gone through a pretty bad bust up. He's got custody of his kids. 85 grand a year. He can't afford much. He's on struggle street at $85,000 a year as a single dad. He's now at the point where he's got to find someone else in a similar bucket, and they go and get a 4.2. That's his option to get a rental property at the moment.
Hmm. Yeah,
Um,
vacancy rate
you know,
0 point. Yeah. Oh, you go ahead. Yeah.
yeah, we're really, so my wife used to work for Anglicare, and she's done a lot on housing supply, and particularly that lower quarter of people, they're really struggling on housing affordability. There's a street in Fremantle that has free bathrooms. If you go there any night of the week, you'll see that there's 20 to 30 cars parked on the street. That's people who can't get a rental property, who can't afford a house. And you look at the cars, they're not $3,000 40-year-old Corollas. They're $85,000 Land Cruisers and Pajeros and Patrols, right? They just can't get a house that they can afford, or they've been misbehaving. They're on the tenancy blacklist and they can't get a house either.
Yeah, very sobering as well.
Yeah,
And yeah, it's
it's coming with some high social cost.
yeah. And yeah, I think that you know, the reflected in the rental vacancy rate, you know, it's low across the country, but yeah, I think last time I looked, it's particularly low in Perth, yeah, 0.4%. What was it back in, was it 2017, 2018? Did it get as high as 7%? Is that
It
about
was
right?
about 8 or 9%.
8%. Yeah.
It was, it was pretty bad. I'll give you an example. So there's a suburb called Morley, which has a
Mm.
lot of quarter acre blocks with a ranging of R20 to up to R60. And you could get a 1950s home in fair condition for $400,000. Great bargain. And you could, in theory, drop the house, put 2 to 4 to 6 units on it. Not that you would make money in that market, but great quality land bank. But I'd have to go to my clients, look, it's probably going to be 4 months before we can get a tenant, and you're probably going to get 300 a week. It's now completely upended. That house today would be getting 600, 650 a week rent and would go first open home multiple offers.
Yeah.
Um,
Yeah, let's talk about some case studies. You know, most of my
yeah,
listeners are doctors or, you know, some nurses and other healthcare workers as well. Um,
yeah.
any case studies in terms of some investors, you know, some that have done well, or maybe some, on the other hand, you know, maybe before they met you that had done some horror stories in terms of property investing?
Yeah, well, look, I'll take you through a property that's going to settle tomorrow. Came to me off market. So the owners is three Chinese sisters, and they will wield the property. So to them, there's no emotional attachment. They've been self-managing the property, and to be blunt, doing a very poor job of it. So tenant on, so it's a duplex pair, 2 beds, 1 bath in Dinella. And this is sort of really why you use a buyer's agent. Um, Came to me off market, principally because the owners were tight and they didn't want to spend a marketing fee. Um, so the left-hand unit, great tenant, young guy paying $350 a week. The tenants or the owners thought that they were clever and saving money by not having a property manager. Market rent for that is $450 a week. On the other side, there's a guy who's been in it for about 7 years. He's on a disability pension with his wife, and he's a passionate smoker. So nicotine stained ceilings, and sort of came to light once we had the property under contract that he was at war with the owners because he's had a blocked kitchen sink for 6 months and it needs a replumb. It's galvanized steel piping, it's all rusted and blocked, and they didn't want to spend the money, so he stopped paying rent for 3 months. So gone through that, but in the building inspection, we picked up that the firewall is far amiss from code. So the point of the firewall is if one unit catches on fire, you've got a 3-hour burn time, which is enough to get you out, get your assets out, fire department to come to put out the fire. And the owners refused to fix it. So it's been some interesting negotiations, but we're settling on it finally a week late tomorrow. We're then going back now to the add value. So I believe we picked these up for under 800,000. These are worth $500,000 each today. We're going to then spend $50,000 on each unit in around 8 months' time. The kitchen, the bathrooms are all original 1970s and very tired. The ladies that have owned it, they've spent nothing. So window treatments, carpets, we're going to give it the full Monty. Once that's complete, there are comparative evidence to say today that they're worth 600,000 aside. What we're then going to do is draw that equity, and my client has two choices. So it will still be a little bit negative. So choice one is to put a granny flat at the back. We're going to drop, there's a sort of fence that divides them into two halves. We'll get rid of that. We've got plenty of room down one side. We can put a granny flat at the back. Or we'll just draw that equity and we'll go again. Okay, so nice, simple add value off market. For me, it's been quite a challenging property. You never would have seen that on market. And I'm bringing a great buy, great strategy, and then taking the headaches. Your clients are, or your listeners are typically very time poor. and the time and the stress to deal with that. They just don't have bandwidth to deal with it. Another one that I'm working on at the moment for a cardiologist. So it's, I'm a bit angry. The agent told me it wasn't going on market and he's just advertised it. The property is a 1/4 acre block with an R40 zoning. The investor who owns it lives in Sydney and is struggling to pay their own mortgage. So they want to exit this property, they'll clear 200,000, put that onto their mortgage. Suddenly some of their pain disappears. It's $12,000, $1,000 less a month that they have to find to pay bills. What we're going to do, so this suburb has a screaming need for 4.2s. We're going to, it's got a very tired 1970s 3-1 on it with a difficult tenant. So tenants in this day and age, because it is so scarce, they think that by denying buyers access to the property, they're doing the right thing to preserve the roof over their head, which you understand. But in reality, all it does is the new property manager goes, right, next release, you're out. You're a headache. We don't want you. So what we're going to do is buy this. We're going to put a 4.2 at the back, another 4-bed, 2-bath, and then we're going to drop the front house and we're going to build a rent by the room 6-bed HMO, 6-bed, 6 baths. Looking to get that for around the low 700 mark. Great buying. So that's doing it well. I'm just trying to think of the exact specifics. So I've got another client who was DIYing it himself. So he bought a little unit in a suburb I just wouldn't go near. Absolutely, absolutely wouldn't go near. It was hemorrhaging cash. It was very tired because of the demographics of the suburb. People just didn't want to live there. And the gap with the vacancy, the repairs, the maintenance, and the high property management because of what was involved to keep that property going with repairs and maintenance, it was eating him alive. So what we did was we couldn't sell that. He was going to be upside down. He was going to lose money on it. So instead, what we did was got a very good broker, sat down. The guy liked to enjoy life, so we put him on a bit of a budget, got his serviceability up, and we then purchased him a 4-bed, 2-bath home in a suburb called Edgewater that was a retain and build, right next door to the biggest proponent of development in Western Australia, as I found out later. Subdivided the property, sold the block for, it was around, we paid, this is going back about 4 or 5 years ago, we paid something like 470,000 for the house, and he sold the block for 300. Kept the house, and we've designed the subdivision in such a way that at a later date, we can drop that house and we can put 2 houses on it. So he was really happy with that income. He then basically increased his serviceability, got a promotion at work, and we bought him a little duplex half in Rivervale for less than land value. Block shape's a bit crap, but the intent was to then purchase the neighbour. These are the 1970s, they're quite tired. The house is 800 metres from the river, 2 k's from the city, 3 k's from the airport. And we would later on develop that. Then he said, look, David, I actually want a house to live in myself. I'm sick of share housing with mates. So bought him, agent completely missed it. And so agents don't really understand the R code subdivision, what it's going to look like. Agent completely missed and didn't price accordingly that this very small 3-bed, 1-bath duplex half was a retain and build. Do need the neighbour's permission, but we can keep the house as it is and put one right beside it. So he's moved into there with his girlfriend. He's very happy. And now the neighbour's unit has come up for sale off market, and we're in the process of negotiating that. And look, it's not a pretty, the owner that has been there has done some creative renovations. It's pretty heinous. He's then going to move into that. We're going to then rent the good side. And what we're going to do is we're going to combine lots so that it becomes as PPOR, so that any capital growth between now and when we develop it is tax-free. 2-3 years, we're going to then push over the duplex pair, and because of he had a smaller lot, the one he's about to purchase is a bigger lot. What we're going to do is put 4 high-quality townhouses on there in 3 to 4 years. He'll move back to his Edgewater rental whilst that's being done. Then really he'll just have a massive capital and he'll be exiting, working, I'm hoping, in about the 4 to 5 year window.
Interesting. In that scenario, because he lived in one duplex first and then moving in the other, I mean, obviously this is not accounting advice, but I assume he would only get like a partial principal place exemption or
Yeah,
CGT or
the trick is to combine titles, because then it's
ah,
his PPOR. So
right,
there's strata, so he owns half of a map, the other one owns the other half. So if we dissolve that and he's living in it,
right,
great tax
right.
minimization. And we'll have to build all 4 at once,
Hmm.
just because it's just going to be way more economic on the build price than doing 2 and then doing another 2.
Okay. Yeah. Awesome.
Um,
And I know most of your and investor clients, including doctors, are investors. For
yep,
those that I know a lot of doctors like to spend big on a principal place of residence, which I think
yep.
I try to counsel them, if you can, try to retain some cash and borrowing power to invest as well. For those,
Yeah.
say, purchasing their own owner occupier, would you still recommend a buyer's agent? And if they try to go it alone, like any tips on negotiating or sourcing or
So the biggest tip I can give everyone is understand the seller. Not, like I said, 1 in 10, it is not money. I'll give you a story. Property went on market, and once again, not all my properties are hoarder homes. This was a hoarder home, and it was probably the worst one I've ever done. So went there with my client, and the agent said, "Oh, the deceased's mother is here." So I just said to my client, grab the agent, keep him busy, give me 4 minutes. I sat down to her and said, "Look, um, you know what's I really feel for you. No one should have to bury their son. And I can see you have a really big problem here in dealing with all of this." And she said, "Oh, I'm 68 years of old. My husband is 72. We're completely devastated. I don't know how I'm going to deal with all this stuff. My husband is he's just can't cope. He's just off the charts. I just don't know what I'm going to do." Look, what we'll do is I'm going to write you 2 offers. The first offer will be at a higher price, and it says you've got to get rid of his possessions. We'll pay this much. The other offer says that once we bring you a letter of finance, we will deal with everything in the house that you don't want. So take what's important to remember your son by, take it out of the house. Once we bring you the letter of finance, we will deal with everything else. The property was on market. He got 5 offers. We were the lowest price and we secured the property. And what the agent missed is that was a retain and build triplex. So keep the house and put another 2 either side of it. Understand what is important to the seller. So when you're on, depending on your price point. So in WA, the $2 million plus market is actually quite quiet because of affordability. The sub 800 market is absolutely screaming, and you'll get minimum 8 offers for any house you bring on market. The 800 to 850 to million and a half, you still strong competition, but less of it.
Mm.
If you can understand what the seller needs from the transaction, you will do really, really well. Not everyone it's money. Some people it is. You've got to offer the highest price and the best conditions. But other people, and look, when you go through the house, look for the story. What is going on with the seller? What is the house telling you with the seller? And that will give you a really good idea. To find out more, door knock the neighbours. It's probably my favorite trick in the world. Hey, my name's David. I'm thinking of buying the house next door. Can you tell me what it's like to live here?" And just shut up and listen hard. You'll find out everything that you need to know from just door knocking the neighbours either side, and then craft your offer to match what they need. Um, I'm a big fan, and I've found it really useful to just give sellers 2 or 3 days after settlement to move out. Because if something goes wrong, because everything is so landlocked, transactions are generally, 2 to 4 in a ladder, just to give them that little bit of flexibility. So, hey, look, the property above us isn't ready. It doesn't matter. Stay. We're chilled. We're fine. And look, the other thing is be honest with the agent. Not all honest agents are honest back, but do what you say you're going to do, and you'll find it's a good transaction.
Yeah, awesome tips there about finding out what the vendor wants so you can kind of come to a win-win situation. And yeah, that's a good one about talking to neighbors and maybe a variety, just in case one neighbor
Yeah,
is telling stories or doesn't like the vendor in particular. But even then, you'll get information, I guess, from talking to them. Um,
yeah,
so let's, on this podcast, I talk about this concept of, financial health, how often healthcare professionals are so time poor and not taking care of their finances. And that's what I'm trying to promote them, the idea of investing, utilizing experts such as accountants, mortgage brokers, buyers agents, but also trying to understand the concepts yourself as well, so you can educate yourself. In your
yeah.
own life, David, what are some good financial habits that you have implemented either in the past or now?
I think the single biggest thing was getting a financial education. I was completely financially illiterate till I read one book, which everyone has read, called Rich Dad Poor Dad. Um, Thing went off in my brain. And I think that the single biggest thing you can do is get a financial education. And that's reading, watching videos, listening to podcasts like this. Absorb. That is the first thing. Once you're learning that, we've all got different things that button. So, like, I've got some people who just won't touch property, their shares, and they're really, really good at shares. Fantastic. Do that. I'm really, really good at property. So I do that. Find that next thing is work out that niche that's going to get you where you want to go, and accurately define where you want to go. Because if you don't have a destination, the journey is just going, you'll be off on the seas. You're never going to find that destination. So define early what it is you want and where you want it to be. So I don't know if you can see just behind me. So this is my dream board. It's a map of the world of all the places my wife and I and kids, things that we want to do. So that's just for us, is just a daily reminder of where we want to be and what we want to do. And we'll be in September executing one of those things, going to Norway, which is something my wife and I really want to do. Um, then my next bit of advice is you are only as good as the team around you. Um, the better the team, the better the result, the better the outcome. Really build a great team of people. So, look, I could probably do an appendix operation on someone. Wouldn't be very good, but I could probably do. I'd get it right third or fourth time, right? Why do you want to take that risk with your money? Get the professionals. Whatever is that button that you push, get a really, really good group of people who are well networked. Like, my strength I bring to my clients is my network. 80% of what I get is off market, and that is all network driven. Um, it's, and your accountant might know a great stockbroker, your financial planner. You just get that team of real solid individuals around you who know what they're doing. Yes, you're going to pay them, but if they're great, they make you money. It's not a cost, it's an investment.
Yeah. Any closing words of advice for our listeners regarding property decisions? It could be, I've got
At,
some junior doctors buying their first investment, or it could be recently fellowed specialists, trying to buy their big family home. Is there any kind of words of advice?
Act. So many people I've met with have come to me in the last 12 months and said, "Oh, David, I wish I'd listened. I wish. Act. Action, thoughts plus actions equals results.
Mm,
Gotta act." I think that's something, just, yeah, a real big thing in life. You've got to make those decisions. I've got a well-known cardiologist as a client. I'm hunting for property number 8 for him at the moment. The guy is incredibly time poor. He starts at 6 in the morning. He's ringing me at 8, 9 o'clock Perth time, just leaving work.
mm,
Um, but he acts, right. He finds that window of time. And what I do is quick text message, give us a ring. He'll ring me between scrubs. He'll ring me in between rounds. Yep. He'll give me 30 seconds. This is what I've got. Yep. Yep. No. Yes. Right. It doesn't take a lot of time, but he communicates, and this guy is acting. Um, one of the properties I've purchased for him, I believe he will retire into it. It's a development site. It's positively geared, stunning ocean views, great suburb, great location. I believe in about 4 or 5 years, he will be independent. He won't actually need to work, but like a lot of surgeons, I just don't think he can't not
mm.
work. But I believe that for him will just absolutely set him up for life.
Yeah.
And working for him is an option on, he can hopefully cut back on hours because shrouds don't have pockets.
Yeah. Uh, yeah, awesome advice. I think a lot of people, yeah, don't take action. They just blame time poor, or I'll wait to invest until, yeah, I become a fellow to finish my training. But I started when I was an intern, and looking back, it was hard at the time.
Yeah,
But
we were
but
talking when you
but
were an
I'm
intern.
that's right. But I'm really glad that I took the action now. So it's kind of, you put some of that work up front, and then you reap the rewards
Yeah.
later. Yeah.
So So look, a client, we went under offer. The property will be on market in 3 weeks. He's an intern, right? So he graduated med school in Melbourne last year. He's come to Perth. His dad is a well-known Melbourne surgeon, and dad said, "Son, get a job. First paycheck you're buying a property, I'm going to help you." The guy is 27, 28. And we've paid, what did we pay for that property? 740. That'll churn off 2,200 a week. It's a retain and build site. It's a demolish and triplex site. He's going to be positively geared, principal and interest. In time, we're going to buy the neighbour's house. So we've already started that relationship. And he's got an amazing location right by a train station. Absolutely, that those two deals alone will get him halfway through to being able to retire.
Awesome.
And he's 28 years of age. And look, he's doing it tough as a young intern. He spent all his weekends painting walls, ripping up carpet, smashing out some ugly features of the house, which I'll congratulate him as a young 28-year-old bloke for getting his hands dirty and learning. But he is learning, right? So the thing I said to him is, look, you're going to learn how long some of these things take, so that when you get a quote, you can go, that's crap. Stop taking a lend. People find out you're a doctor, suddenly the
Mm,
bill goes up, right?
yep.
No, that's crap. You're going to learn through getting your hands dirty a little bit. Now, this will be the only one he ever does, because after that he'll go into general practice. He wants to be a forgotten it. He's going into special, not bariatrics, bladders. Is what he wants to
Oh,
specialize
yep.
in.
Yep.
Um, and he'll have weekends. It's a great thing about that profession, urologist. That's it. He's great. You don't have to do weekends, but he's at least learning, and he is acted at a young age. This first purchase, absolute standout. It might be next month. It might be 10 years, and we're going to get the neighbour's property. Then we've got a site where we can build 4 to 8 story apartments. It'll be 1,500 square meters, right by a train station, beautiful park at the end of the road. That will get him halfway to being able to not have to work again. And the kid's 28 years of age.
Yeah, excellent story. Um, Finishing up, how can people connect with you?
Simple. Look for BACO, www.baco.com.au. There's a phone number down there. Give me a ring.
Yeah, awesome. Thank you very much, David, for your time today.
Anytime. Happy to help, Daniel.
No worries. And to our listeners, thanks again for tuning in to another episode. I hope you found that useful. I know I did. And, learn, grow your network, and take action. Until next time.